Welcome to a new deep dive. Today we're digging into a bunch of recent sources, looking at some really fast-moving areas. Think cutting-edge tech, market dynamics, and this complex world where space, computing, and even geopolitics collide.
Yeah, and our goal here is really to unpack all this material, articles, research notes, you name it, and pull out the key insights. Basically give you a shortcut to understanding what's actually happening, help you connect the dots across these different fields.
Exactly. We're going to jump right in. We'll look at satellites being built in a way that could, completely flip the traditional space industry. Then there's the whole high-stakes saga of SpaceX's Starship.
And we'll pivot to how quantum computing is trying to carve out a space right in the middle of the AI boom. Plus, major tech market moves and how giants like Apple and Meta are dealing with some serious political headwinds.
Okay, let's kick off with this first segment. It takes us into space, but maybe not how you'd expect. The sources really focus on a company, Endurosat, doing something, well, pretty disruptive.
Right, instead of building these like highly custom one-off satellites, they're making them more like consumer electronics or maybe automotive parts.
That core idea really jumps out from the sources designing satellites specifically for mass manufacturing from the get-go. They say that's very unusual in the space sector where everything is usually tailor-made.
Yeah, and the company itself uses these comparisons, like being the Dell for satellites or having a process like an Apple manufacturing line. They're pulling experience from different places, too, like automotive designs and medical robotic industries.
And here's the part that really hits you in the sources. The profitability. They apparently became profitable the same year they launched, back in 2018.
Which is pretty fast. And the business is growing, what, 2 to 3 times year over year, with average gross margins between 70 and 77%.
70 to 77%. That number just sounds wild, especially when you see the comparisons in the sources.
Exactly. Yeah. Typical space companies, the sources say, might need a decade at best just to hit profitability. And the big aerospace and defense players, think Airbus, Raytheon, Lockheed Martin, their components are often based on like 1970 technologies. Their margins are maybe best case 20, 30%. So a 70% margin, that's a different league.
It really is. So how are they doing it? What do the sources suggest is the key to unlocking that kind of profitability with this manufacturing approach?
Well, it seems to come down to moving away from those older, slower, custom processes. By designing for manufacturing from day one, using concepts from high-volume industries, they change the whole cost structure.
So it's not just building cheaper, it's building smarter in a way.
Precisely. That's what caught Founders Fund's eye, apparently. They were looking for someone focused on mass manufacturing of satellites differently. They even describe Endurosat as potentially the TSMC of Bulgaria, like a national jewel working closely with local universities.
That's a powerful concept, applying mass production efficiency to spacecraft. And it's interesting, the sources note they're already significantly invested in the U.S., too, seeing the tension between continents as maybe even healthy for business.
Right, so that's one really interesting angle on space innovation, fundamentally changing how things are built and sold. But let's shift to another angle. SpaceX and pushing the limits of launch.
Yeah, Starship. The sources mention these sort of Starship and Mars updates about once a year, keeping those huge goals in focus. We're talking humans to Mars, the NASA contract for landing on the moon.
And eventually being the primary vehicle that SpaceX uses to launch everything. I mean, a lot is riding on this thing working.
But then there's the reality of the recent tests. The sources point out the last 2 tests have ended in explosion, debris over the Gulf. It definitely raises the high stakes for the next flight.
They do mention SpaceX identified distinctly different reasons for each explosion, and they've made appropriate design and hardware fixes. So they believe they've addressed those specific failure points.
Okay, but the sources keep mentioning this specific moment. We'll all be holding our breath at about the 8-minute mark. Why is that particular time so critical? What does that tell us about how complex this still is?
That 8-minute mark is critical because, well, that's when the last flights failed.
Yeah.
It really highlights that they're still deep in the engineering weeds, trying to get this massive, incredibly complex vehicle through the toughest parts of its ascent.
So it shows the gap between the vision and the current reality.
Exactly. You have the grand vision. The sources mention phrases like preserving the light of consciousness, and then you have the nuts and bolts challenge of making the hardware reliable through iterative and sometimes explosive testing. It's tough engineering.
Okay, so 2 really different takes on space innovation. One focused on manufacturing efficiency and profit, the other pushing launch boundaries for huge goals. Now let's pivot again. How is computing itself changing to power this AI revolution?
Right? Shifting from space to compute. The sources bring up a new player, Sigitry, founded by the person who founded Rigetti, interestingly enough, and their focus is squarely on quantum-accelerated AI servers.
And they're tackling a problem we hear about constantly, right? The growing energy requirements, power requirements, the sheer growing costs for training new models, these enormous AI models.
Exactly. The bet, according to the sources, is that quantum can offer an exponential speed-up for some really critical AI tasks, things like stochastic gradient descent or low-rank adaptation, which are fundamental to how AI learns.
So the goal is making AI training more accessible, affordable, sustainable.
That seems to be the pitch. Accessibility, affordability, and sustainability.
So what's different about Sigitry's approach based on the sources? How do they plan to deliver this?
What's interesting is their tech. The sources describe them combining different modalities of qubits. So not just sticking to one type like superconducting, but using neutral atoms and photonics as well, all in a single fault-tolerant architecture.
Okay, combining different types of quantum bits.
Right. And crucially, they say this architecture is designed for manufacturing, and it's specifically focused on accelerating training and inference for AI right from the start.
And the sources contrast that with other quantum companies already out there.
They do. The point made is that many existing quantum companies had their roadmaps locked in before AI became the dominant compute paradigm. And they often stick to their own siloed tech choices, just superconducting, or just trapped ions, for example.
So the thinking is, being built for AI acceleration, using multiple quantum methods, gives Sigitry an edge.
That seems to be the argument that this focused approach is the winning approach now. It really shows how fast AI has moved, demanding entirely new kinds of compute solutions tailored just for it.
And they see a massive market, obviously. The sources mention a potential $1 billion market if quantum really changes AI training costs. They see it as completely inevitable, though they still need more funding.
And this focus on AI compute ties directly into the broader market picture the sources discuss. Like that big Salesforce deal to buy Informatica. What was it, an $8 billion deal? Using cash and debt.
Yeah, and highlighted as one of the biggest ever deals for the next phase of AI-driven growth.
And the context there is interesting, too. Apparently, Salesforce considered buying Informatica about a year ago, but the price is $2 billion less now. Informatica's stock had fallen, too.
So what does that deal signal, according to the sources? Consolidation.
That's what they suggest, yeah. Consolidation in the industry. Companies wanting to deepen and strengthen their capability in AI-driven growth, especially around data analytics and building out further in the cloud. It's all about beefing up AI capabilities.
And sticking with AI markets, NVIDIA's earnings are apparently seen as a huge macro-level event. What are analysts watching for there?
The sources list a few key things. Profit margins. The feeling is they might be getting harder to keep at those really high levels. Also, the ramp-up of Blackwell, their next-gen AI chip.
Right, the new hardware.
And this trend of sovereign AI countries wanting to build their own AI infrastructure using these chips.
Are there worries mentioned too?
Definitely. Concerns about sales to China, given the geopolitical situation.
Yeah.
And also questions about the digestion of those AI chips. You know, the big cloud providers, AWS, Azure, Google, they've spent hundreds of billions on these things.
So the market's kind of catching its breath.
That's the term used, a digestion phase. Deploying all that hardware, figuring out how to best utilize it. So even though NVIDIA's stock moved up recently, the feeling is it needs more good deals, more positive macro news trade, lower inflation to really break its old highs, given how much it's already run up.
It's like the market is weighing the undeniable AI excitement against these digestion issues and maybe some geopolitical risks.
Absolutely. So AI is reshaping things from fundamental compute up to enterprise software deals and hardware cycles. But, it's not the only major force causing ripples. Let's look at how politics and geopolitics are hitting some of the biggest tech names.
Okay, shifting gears again. The sources definitely paint a picture of political headwinds, especially for Apple. They note the stock has been through its longest sell-off in more than 3 years, down quite a bit year to date. Actually called the worst performing stock in 2025 among the big Magnificent Seven tech stocks.
And the main trigger for this pain, according to the sources.
It seems to be that surprise announcement about tariffs specifically on Apple initially, which then got expanded to all smartphone makers, threatening a potential 25% tariff if manufacturing doesn't move to the U.S. That creates a lot of political uncertainty.
So why is this situation apparently so confusing and volatile for Apple and investors?
Well, the sources point to all the back and forth. There were exemptions provided, then a pause with respect to China, then another tariff against the European Union, which were also paused. It just makes it incredibly hard for investors to figure out the real impact on, earnings, margins, with demand, pricing.
So Apple's got in a tough spot.
Yeah, juggling the short term and longer term, trying not to anger the U.S. administration, but also not upsetting China either, which is obviously a huge market.
Yeah.
And all while they're trying to shift some production towards India, it's a complex balancing act.
And the sources touch on the idea of actually reshoring iPhone production fully to the U.S.
They basically say moving the entire supply chain is impossible to do anytime soon. It would take billions of dollars and maybe 10 plus years. The realistic short-term hope mentioned is perhaps just getting products assembled in America.
So significant challenges there. And other headwinds are mentioned too.
Yeah, things like tepid official AI progress compared to rivals, just general growth struggles, and the stock still having a high multiple, plus that detail about OpenAI buying Johnny Ive's hardware startup I.O.
Right, for $6.5 billion. How does that fit in?
The sources frame it as adding pressure that right now Apple could do without, especially with apparent Vision Pro issues. It sort of combines the sore point about Apple's own AI, Apple Intelligence, being slow to arrive, with potential future competition in AR from an OpenAI venture.
Interesting pressure point. Still, the sources do remind us Apple is, what, near a $3 trillion company?
Exactly. Still massive. And the perspective mentioned is they still have the strongest ecosystem and potentially all the pieces that can come together. It's just the timeline for Apple Intelligence that seems to be making people scratch their heads.
Okay, so Apple's dealing with tariffs and competitive pressure. Let's look at Meta. The sorts of detail Mark Zuckerberg making efforts to get close with President Trump and sort of win over Magmay World.
And has that approach worked out, according to these insights?
The main finding reported is, not really. These efforts have not yet borne the fruit that the company so desires. Apparently, it hasn't opened any doors in a way that helps the company's profile. They even point to the FTC trial, with Zuckerberg testifying, as maybe showing some of the weakness of this strategy.
And there is a pretty striking detail about the relationship with the previous administration, the Biden White House.
Yes, that was quite something. The sources claim the Biden administration was incredibly skeptical, that President Biden himself privately called Zuckerberg a little twerp, among, quote, other perhaps more colorful terms.
Wow.
And remember that public clash over COVID misinformation. When Biden said Meta was killing people, it really underscores how difficult and, frankly, fraught these relationships between big tech and political power can be.
And does this political maneuvering have an impact inside Meta itself? The sources hinted at that.
They did. They report internal strains, saying a lot of employees are really discontent with this approach. There's mention of things like secret book clubs, wellness checks, suggesting real unease.
And even speculation about layoffs.
Yeah, that some employees apparently believed layoffs were used partly to quell dissent, though the company denied that. But the overall conclusion drawn from the sources is that the atmosphere is pretty sour inside the company because of this political strategy.
It really highlights the internal complexities these companies face when they engage so directly in politics. And this theme, politics impacting tech and global business, isn't just about Apple and Meta, right? The sources link it briefly to EVs, too.
That's right. They mentioned the fierce price competition in China's EV market, leading to sweeping price cuts, up to 34% in some cases, by companies like BYD.
And Tesla is feeling political heat, too.
Yeah, specifically the political backlash of Elon Musk hurting the brand in Europe. That's compounded by potential new round of tariffs on EVs there.
There was a quote in the sources that kind of summed up that Musk factor, wasn't there?
Yes. The observation was something like, even if Elon were to say tomorrow he's quitting Doge and going back to running Tesla, that doesn't change what's happened with his brand. That trouble will stick around for a while. It just shows how personal political stances can create lasting business challenges now, especially in globally competitive industries.
So that really was a deep dive across quite a few areas. We went from these really innovative ways to build satellites with Endurosat to the huge challenges and ambitions of SpaceX's Starship.
Then jumped into the future of computing, with quantum aiming directly at AI scaling problems, and how AI itself is driving market deals like Salesforce Informatica, while the whole industry watches NVIDIA and that chip digestion phase.
And wrapped up with the very real political and geopolitical pressures facing giants like Apple and Meta, impacting their strategy and even internal morale, a theme echoed even in the competitive EV market.
It's clear from these sources, isn't it? You have these powerful forces, raw technological innovation, hard market realities, and these external political pressures all tangled up together, shaping what's happening right now.
Absolutely. So here's maybe a final thought to chew on, just based on everything we've pulled from these sources today. You see Induraset finding incredible profitability just by rethinking how things are made in space. You hear about a potential $1 trillion market if quantum can solve AI's cost issues. And yet you see these massive multi-trillion-dollar companies like Apple grappling with political risks and market cycles. So what does that mix tell us about where the biggest opportunities and maybe the biggest risks really lie in tech today? Is it the fundamental innovation? Is it market timing? Or is it increasingly about navigating these external pressures?
Definitely something to keep thinking about, keep exploring these connections.
Thanks for joining us for this deep dive.